In this video, we will show you the false breakout trading strategy that is a simple yet powerful approach. And your trading approach can be changed after knowing this secret. Not knowing this false breakout zone is the reason you will spend years failing. After watching this video, you will learn how to avoid false breakout, and you can identify true breakout to trade like a professional that took us years to discover, which will make you a good, profitable trader. Make sure to hit the subscribe button and hit the notifications bell so that you know exactly when new content is released. Also, let us know your questions and thoughts below, or video topics you want us to cover, as we always take your comments into consideration and love hearing from you all. False breakouts are exactly what they sound like. A breakout that failed to continue beyond a level, resulting in a false breakout of that level. A false breakout of a level can be thought of as a deception by the market, because it looks like the price will break out, but then it quickly reverses, deceiving all those who took the bait of the breakout. It's often the case that amateurs will enter what looks like an obvious breakout, and then the professionals will push the market back the other way. As a price action trader, you want to learn how to use false breakouts to your advantage rather than falling victim to them. In these two clear examples of false breakouts above and below key levels, note that false breakouts can take different forms. Sometimes a false breakout will occur with a pin bar pattern or a fakie pattern as the false break, and sometimes not. A false breakout is essentially a contrarian move in the market that flushes out those traders who may have entered on emotion rather than logic and forward thinking. Generally speaking, a false break is happening because amateur traders or those with weak hands in the market will tend to enter the market only when it feels safe to do so. Professional traders watch for these missteps by amateurs, and the end result is a very good entry for them with a tight stop loss and huge risk-reward potential. It takes discipline and a bit of gut feel to know when a false break is likely to occur, and you can never really know for sure until after one has formed. So if you are enjoying the video and found it helpful, please leave a like on this video and a comment, as this goes a long way and helps support our channel. We appreciate it. So let's get back to it. False breaks occur in all market conditions: trending, consolidating, counter trend. But perhaps the best way to trade them is in line with the dominant daily chart trend, like we see in the chart. In this chart, we had a clear downtrend in place and multiple false breakouts to the upside within that trend. When you see a false breakout that is against a dominant trend like this, it's usually a very good signal that the trend is ready to resume. Amateur traders love to try and pick the bottom in a downtrend or the top in an uptrend, and this can cause false breakouts against the trend. False breaks are prevalent in trading ranges because traders often try to pick the breakout of the range, but usually price stays range-bound for longer than most assume. Knowing that false breaks are somewhat common when a market is struck in a trading range is a very valuable piece of information for a price action trader. Trading a range-bound market can be very lucrative, as you can wait for price action signals at the support of resistance boundary of the range to trade back toward the other side of the range. The best way to be sure you don't get caught in a false breakout from a trading range is to simply wait for price to close outside of the range for 2 days or more. If this happens, there's a good chance the range is finished and price is then going to start trending again. In the chart, we can see how a price action trader can use a false breakout pin bar signal to trade a false breakout of a trading range. The false break pin bar at the trading range key resistance, and also the two false breaks at the trading range support. More experienced traders can also trade false breakouts that don't contain a price action trigger like a pin bar. The two false breaks of support were both potential buy signals for a savvy price action trader. False breakout patterns can sometimes signal the beginning of a new trend and the end of the current one. In this example, we can see a key resistance level that held price on 2 tests. Then, on the third test, price created a large false break pin bar strategy that signaled a potential down move was coming. As we can see in this chart, not only did the false breakout signal a down move, but it kicked off an entire downtrend. Now, if you guys enjoyed this video and found it helpful, please show your support by hitting the thumbs up button, subscribing to our channel, and turning on the notifications bell so that you can keep up to date with new content releases. Also, leave your questions and thoughts below. If you want to know more about trading and investment, you can check out our website, fxtradinger.com. I hope you've enjoyed this video. Thanks for watching, and I'll see you in the next video.